Welcome to the Deep Dive,
The Generative Intelligence Podcast.
where we use the power of AI to explore the fascinating world of finance.
Ah,
Today, we're diving into an Australian company
okay.
called Finder Energy Holdings LTD,
Right.
or FDR on the ASX.
Got it.
You've given us a really interesting mix of sources,
Yeah.
company announcements, financial reports,
Mhm.
trading data, even some social media chatter.
Interesting.
And remember, this is for informational purposes only,
Okay.
not financial advice.
It's a real mixed bag, which is perfect for a deep dive.
Right.
We can see how the company presents itself, how
Yeah.
the market reacts, and what everyday investors are saying.
Yeah.
What's fascinating is that we can try to connect the dots between these different data points
Okay.
and see if any compelling narrative emerges.
Exactly. So who is Finder Energy?
Well,
Paint me a picture.
they're a relative newcomer to the ASX,
Okay.
having listed in April 2022. Their stated goal was to fund exploration drilling and expand their asset portfolio.
Right.
And they're all about what they call
Okay.
infrastructure-led exploration, which, if you think about it,
Yeah.
is a pretty smart approach, especially for a company at their stage.
Okay. I'm intrigued.
Right.
What is infrastructure-led exploration
Yeah.
and why is it so smart?
Essentially, they focus on prospects
Yeah.
near existing infrastructure.
Okay.
Pipelines, processing facilities, things like that.
Okay.
This can significantly reduce development costs and time,
Right.
which is crucial for a smaller company.
No.
It's all about maximizing efficiency
Mm.
and getting to production faster. They're not just out there drilling blindly.
Right.
They're strategically targeting areas
Okay.
where they can leverage existing infrastructure to their advantage.
Makes sense.
Yeah.
So where are they exploring? Are we
Uh-huh.
talking about dusty deserts or icy tundras?
Their portfolio is actually quite diverse. They have interests in exploration permits,
Yeah.
both in Australia,
Okay.
specifically the Northwest Shelf,
Okay.
and in the UK North Sea.
Okay.
So a bit of both, actually.
Interesting.
And they're not afraid to utilize cutting-edge technology.
Okay.
They're big proponents of modern seismic reprocessing technologies,
All right.
which allow them to reanalyze existing data with greater accuracy,
Okay.
potentially uncovering hidden potential that might have been missed before.
It's like finding buried treasure with a high-tech metal detector.
Yeah.
But exploration is expensive, right?
Yeah.
How are they funding all of this?
That's where their partnership strategy comes in.
Okay.
They actively seek farm-out partners,
Okay.
essentially teaming up with other companies to share the costs and risks associated with exploration.
Okay.
This not only lightens their financial burden,
Mhm.
but also provides access to additional expertise and resources.
Smart move.
Right.
It's like a collaborative treasure hunt.
Yeah.
Now, speaking of treasures, one acquisition really caught my eye.
Yeah.
CAUTIONARY in Timor-Leste.
Yes.
This was a major development announced in August 2024.
It was.
Finder acquired discovered oil resources
Okay.
from two oil giants,
All right.
Eni and Inpex.
Wow.
We're talking about 34 million barrels of discovered oil resources classified as 2C,
Okay.
which means they're potentially recoverable,
Right.
but require further appraisal to confirm.
Got it.
And these resources are spread across multiple fields:
Okay.
Kutatassi, Jahal, Krill, and Squilla.
Oh, wow.
Quite the mouthful.
It is.
But here's what makes this acquisition so interesting.
Yeah.
These resources were discovered when oil prices were much lower,
Right.
making them uneconomical at the time.
Yeah.
But fast forward to today,
Okay.
with oil prices significantly higher,
Yeah.
these resources have become viable and potentially very profitable.
Absolutely.
So Finder essentially swooped in and snatched up these assets at a bargain price.
Yeah.
Talk about being in the right place at the right time.
Totes. Exactly. And the acquisition cost was remarkably low.
Okay.
A mere $2 million upfront.
Wow.
Another $6.5 million
Oh.
once they reach a final investment decision, or FID,
Okay.
and a 5% royalty on future production.
Okay.
But that's not all.
Oh.
They also inherited approximately $200 million in historical exploration costs,
Wow.
which are potentially recoverable from future production.
Wow. They essentially got a massive discount on
Yeah.
all the work that had already been done.
That's right.
It sounds like they're setting themselves up for a potentially huge win.
Potentially.
It does seem that way.
It does.
But let's remember that oil production from Kutatassi isn't planned until the fourth quarter of 2027.
Yeah, that's right.
So there's still a bit of a wait before they can reap the rewards.
A little ways away, yeah.
Okay, so they've got this potentially lucrative acquisition in the pipeline.
Okay.
But what about their current financial picture?
Well, their IPO back in 2022 raised 15 million Australian dollars, which was initially estimated to fund their activities through to the end of 2023.
Okay.
However,
Yeah.
those savvy farm-out agreements they've been making
Right.
have extended their cash runway by over 12 months.
That's great news.
It is.
It shows they're being resourceful and stretching their funding as far as possible.
Yeah.
But what about their actual financial performance?
Okay.
Are they making money?
That's where things get a bit more complex.
Okay.
Their financial statements tell a story of exploration and evaluation expenses,
Yeah.
which are typical for companies in this phase.
So they're investing heavily in their future.
They are.
But are those investments paying off yet?
Not quite.
Okay.
Their financial reports for the past 3 years show net losses.
Okay.
In 2022, they reported a net loss of 11,105,937 Australian dollars. The following year, FY 2023,
Okay.
the loss increased to 2,430,135 Australian dollars.
Yep.
And for the most recent financial year, FY 2024,
Yeah.
they reported a net loss of 2,483,332 Australian dollars.
Okay. So they're still in the red.
Yeah,
That's not uncommon for an exploration company.
it's not.
But it does raise some questions.
Yeah.
How are investors reacting to these losses?
That's where things get really interesting.
Okay.
We can glean some insights from the social media chatter surrounding Finder Energy,
Okay.
especially on those online forums where retail investors gather.
Okay.
It's fascinating to see how sentiment ebbs and flows with each company announcement.
So what's the general vibe? Are people optimistic or pessimistic about Finder Energy's prospects?
There's definitely a buzz,
Yeah.
a palpable energy surrounding their activities. People are intrigued by their aggressive acquisition strategy, their focus on high potential regions, and their use of advanced technology.
Right.
The Kutatasi acquisition in particular generated a lot of excitement, with some investors believing it could be a game changer for the company.
So are they being hailed as the next big thing in oil and gas?
Not quite.
Okay.
There's also a healthy dose of skepticism, especially given their current financial performance.
Yes.
Some investors are concerned about the inherent risks of exploration,
Right.
the volatility of oil prices,
Okay.
and the potential for regulatory hurdles to derail their plans.
It's like watching a high-stakes poker game.
Yeah.
They've made some bold bets.
Yeah.
But will they pay off in the end?
That's the million-dollar question.
That is the million-dollar question.
And to answer that, we need to delve deeper into their portfolio, their exploration activities, and the broader market dynamics that could impact their success.
Well, I'm on the edge of my seat.
All right.
Let's dive into those details.
Let's do it.
Right.
Welcome back to the deep dive.
Thanks for having me back.
Before we dig into those juicy details, it's important to understand who's steering this ship.
Right.
Finder Energy's management team has extensive experience in the oil and gas sector, which could be a major asset in navigating the complexities of this industry.
Oh, absolutely.
Right.
A company is only as good as the people running it.
Yeah.
So who are the key players?
At the helm, we have Damon Neves as CEO and Managing Director.
Okay.
With over 18 years of leadership experience in the oil and gas industry,
Right.
he brings a wealth of knowledge and expertise to the table.
That's good.
His background emphasizes commercial and transactional expertise,
Really?
which aligns perfectly with Finder's focus on partnerships and acquisitions.
That makes sense.
Yeah.
You need someone who can not only find the deals, but also close them effectively.
Right.
Who else is on the leadership team?
Next, we have Shane Westlake as technical director.
Yeah.
He's a geophysicist with over 20 years in the energy industry.
Right.
And here's the interesting part.
Okay.
15 of those years were spent with Finder.
Oh, wow. Okay.
So
Yeah.
this suggests a deep understanding of their assets, their exploration strategy, and the overall potential of their portfolio.
It's great to have that continuity.
Yeah.
Someone who knows the company inside and out.
Yeah, for sure.
What about the exploration side of things? Who's leading the charge there?
That would be Aaron Bond,
Okay.
the exploration manager.
Right.
He's been described as a proven explorer,
Oh.
which immediately piques my interest.
Yeah.
It seems he's been involved in some significant oil discoveries in the past,
Okay.
which bodes well for Finder's exploration efforts.
That's reassuring.
Yeah.
Having someone with a track record of success can certainly boost investor confidence.
Absolutely.
But let's not forget,
Right.
even the best exploration team can't guarantee a discovery.
That's right.
So let's talk about the specific areas
Okay.
where Finder Energy is focusing its efforts.
One of their most promising targets is the Dorado play trend in Australia.
Okay.
They hold a 100% equity stake in exploration permit, WA 54650.
Okay.
A massive area
Okay.
covering 7,260 square kilometers. What makes this area so exciting is its proximity to the Dorado field, which is the largest undeveloped conventional oil resource in Australia.
Wow. So they're right in the heart of the action.
Exactly.
And they've identified 3 prospects within WA 547 Breeze, Favre, and Brady.
They've given them some sporty names, haven't they?
They certainly have.
Yeah.
It makes it easier to remember, and it adds a bit of fun to the technical jargon.
A little bit, yeah.
But what's important is that these prospects have similar geological characteristics to Dorado, almost like Dorado lookalikes.
Yeah.
They're considered Dorado play extensions, meaning they could potentially hold significant amounts of recoverable oil.
Right.
We're talking potential for over 500 million barrels.
That's a lot.
So they're hoping to replicate the success of Dorado, but on their own terms.
Precisely.
And to mitigate the inherent risks of exploration, they've secured a 3-year, 10-year extension for WA 547P, giving them until January 2027 to explore and hopefully make a discovery that gives them a decent window to work with.
Yeah.
And of course, they're not going it alone, right?
Of course not.
True to their strategy, they're actively seeking a farm-out partner to help fund the drilling costs for these Dorado play prospects. It's a smart way to spread the risk and bring in additional expertise.
For sure.
It's all about teamwork.
Yeah.
Now, besides Australia, where else are they exploring?
Their portfolio also includes interests in 5 exploration licenses in the UK North Sea.
Okay.
One of these licenses, P2524, is located in the South Viking Graben, an area known for its abundance of oil, gas, and condensate fields.
And this ties back into their infrastructure-led exploration strategy, right?
It does.
Being in a proven hydrocarbon region with existing infrastructure can significantly reduce development costs and accelerate the path to production.
Absolutely.
Exactly.
And they've already identified a prospect within P2524 named Barracuda, which lies in a sweet spot for hydrocarbon potential.
Okay.
It's close to existing discoveries, suggesting a viable pathway for oil migration and accumulation.
That's encouraging.
Yeah.
It seems like they're strategically positioning themselves for success in this region.
It seems so.
What about their other UK licenses?
Another license that stands out is P4502.
Okay.
It's located in an area known for significant discoveries.
Okay.
And Finder, along with their partner, Dana Petroleum, has until the end of November 2023 to decide whether to drill or drop the license.
A drill or drop decision.
Yeah.
That sounds intense.
It is.
It's a critical moment where they have to weigh the potential rewards against the risks and ultimately make a tough call. Do they commit to drilling an exploration well?
Right.
Or do they walk away?
Big decision.
High stakes indeed.
Yeah.
What factors will influence their decision?
They'll be considering a range of factors, including the geological data,
the financial implications, and the regulatory environment. How confident are they in the prospectivity of the area? Can they secure a farm-out partner to share the drilling costs?
Yeah.
Are there any permitting hurdles or environmental concerns that could complicate the project? It's like putting together a giant puzzle.
It's a lot to juggle.
It is.
And their decision on P2502 will have a ripple effect on their overall portfolio and financial outlook.
Absolutely.
Every decision in this industry carries significant weight.
It does.
Now, shifting gears slightly, let's talk about their license, P2530.
Okay, what's the story with this one?
P2530 is located in the North Kittiwake Basin, another prolific hydrocarbon region in the UK North Sea. Finder holds a 60% stake and is the operator, giving them a significant level of control. What's particularly noteworthy here is their use of advanced seismic reprocessing techniques.
I'm sensing a theme here.
I know, right?
Yeah. They seem to be really embracing cutting-edge technology.
They are.
In this case, they took vintage 3D seismic data acquired back in the 1990s and gave it a modern makeover using techniques like broadband processing, FWI, and pre-stack depth migration.
Oh.
It's like taking an old blurry photograph and using digital tools to enhance its clarity and reveal hidden details.
So they're essentially breathing new life into old data.
Yeah.
Potentially uncovering opportunities that were previously overlooked.
Precisely.
And this has resulted in a significantly clearer image of the subsurface.
Okay.
Allowing them to pinpoint promising prospects within P2530.
Right.
Particularly in the Upper Jurassic Fulmar Formation sandstones.
Now, the Fulmar Formation rings a bell.
It does.
Isn't that a proven reservoir in the North Sea?
Yeah.
Responsible for some substantial oil discoveries?
You're absolutely right.
It's a well-established target in the region.
It is.
And Finder's detailed technical studies have led to the identification of several prospects within P2530.
Okay.
Including a potential appraisal of the historical wagtail oil discovery.
Okay.
And 2 intriguing new prospects named Marsh and Bancroft.
Interesting.
So they're exploring new targets.
Yeah.
While also considering the potential redevelopment of an existing discovery.
Hmm.
It's a smart approach.
It is.
Spreading their bets.
Yeah.
And maximizing their chances of success.
Indeed.
It demonstrates their adaptability.
Right.
And their willingness to leverage all available opportunities.
For sure.
Plus, all of these prospects are strategically located within tieback distance to existing production facilities.
Right.
Perfectly aligning with their infrastructure-led exploration strategy.
Yeah, exactly.
It's all about maximizing efficiency and minimizing development time.
Absolutely.
Now, I want to circle back to the Dorado play trend in Australia.
Okay.
Remember that Super Bowl 3D seismic survey they were planning?
Yes.
That was a major part of their exploration strategy for WA547P.
It was.
They're aiming to high-grade their prospects and satisfy work program commitments.
Right, but it seems they've hit a bit of a snag.
Yeah, what happened?
Unfortunately, yeah.
Okay, yeah.
In October 2022,
the
National Offshore Petroleum Safety and Environmental Management Authority, or NOPSEMA, the primary regulator for offshore activities in Australian waters, introduced new stakeholder consultation requirements for all environmental approvals.
More red tape.
Yeah.
That's never fun.
It can certainly be frustrating, especially when you're eager to get things moving.
Right.
While Finder has started incorporating these changes into their approval process for the Super Bowl 3D survey, it's likely to cause delays.
That's unfortunate.
Yeah.
Especially given the high level of exploration activity in the area right now.
It is.
But they're not giving up.
They're not.
They're exploring ways to collaborate with other companies operating in the area. Seeking synergies to potentially reduce the cost and complexity of their planned operations.
Oh, that makes sense.
It makes sense to try and work together.
Yeah.
Teamwork often helps overcome obstacles.
Yeah, it does.
Now, before we move on,
I
want to touch on something intriguing I came across in their IPO prospectus. Performance securities. Can you shed some light on what those are?
Of course.
Performance
securities are essentially incentives tied to specific performance milestones. It's a way to align the interests of the company's management with those of its shareholders.
So if the company performs well,
Yeah.
the management team benefits.
Exactly.
The prospectus outlines several tranches of these performance securities,
Okay.
each with its own set of vesting conditions.
Okay.
For example,
Yeah.
one tranche vests if the 30-day volume-weighted average price,
Right.
or VWAP,
Okay.
of the company's shares
Yep.
exceeds the IPO offer price by a certain percentage.
So their remuneration is linked,
Yeah.
at least in part, to
Right.
share price performance.
That's right. It's a way to motivate management to drive growth and increase shareholder value.
Exactly.
Interesting.
Yeah.
And what about those other tranches? What triggers their vesting?
Some are linked to the achievement of specific value creation targets outlined in the prospectus. These targets involve things like making significant discoveries, securing lucrative farm-out agreements, or completing transactions that generate substantial value for the company.
Okay, so it's not just about share price, but also about tangible achievements that contribute to the company's overall success.
Precisely.
And the vesting of these performance securities could have a significant impact on the number of shares outstanding, potentially influencing future share price movements.
It's all connected. The financial performance, the exploration success, the management incentives, and ultimately the share price.
Exactly.
It's a complex ecosystem. Understanding these connections is crucial for any investor considering Finder Energy.
We've covered a lot of ground, from their exploration activities in Australia and the UK to the intricacies of their performance securities program.
Yeah.
But the question remains, how do we assess Finder Energy's prospects?
Yeah.
Are they on the path to unlocking substantial value?
Okay.
Or are the risks too great to ignore?
Those are the million-dollar questions. And those are precisely the questions we'll address in part 3.
Okay.
So stay tuned, knowledge seekers.
Right.
The deep dive continues.
Welcome back to the final part of our deep dive into Finder Energy.
Yeah.
We've covered a lot of ground.
We have.
From their ambitious exploration strategy to their savvy acquisitions and their experienced management team.
Right.
We've also delved into their financial performance.
Yeah.
Which, as we've seen, is a mixed bag.
It is.
They're investing heavily in exploration.
Yeah.
Which has led to losses in recent years.
That's right. But they've also secured some potentially lucrative assets.
They have.
And extended their cash runway through strategic partnerships.
That's right.
Right.
Exactly.
And let's not forget the excitement surrounding the CAUTIONARY acquisition.
Yeah.
It's like they found a hidden treasure chest that others had overlooked.
Totally.
But as we've discussed, exploration is inherently risky.
It is.
There are no guarantees of success.
That's right.
Absolutely.
And that's the crucial point we need to address in this final part of our deep dive.
Okay.
The balance between potential rewards and inherent risks.
All right.
It's the age-old dilemma for investors in the oil and gas sector.
Okay, so let's put on our analytical hats.
Let's do it.
And weigh the evidence.
Right.
What are the key factors that could tip the scales in Finder Energy's favor?
First and foremost, their portfolio of assets is strategically positioned in proven hydrocarbon regions.
Okay.
The Dorado play trend in Australia and those UK North Sea licenses are all in areas
where significant discoveries have already been made.
Right.
They're not exploring in uncharted territory.
Right.
They're targeting areas with a high probability of success.
That's reassuring.
It is.
It's like they're following a treasure map that's already led to gold.
Exactly.
And their focus on infrastructure-led exploration is another major advantage.
Right.
By targeting prospects near existing infrastructure, they can potentially fast-track development, reduce costs, and get to production faster.
Exactly.
This is crucial for a smaller company like Finder.
It is.
Allowing them to generate revenue sooner and fuel further growth.
For sure.
It's a smart strategy.
It is.
Especially in a volatile industry like oil and gas.
For sure.
Speaking of volatility, how does the current oil price environment factor into their prospects?
That's a critical consideration.
Okay.
Oil prices have been on a roller coaster ride in recent years.
Yeah.
And while higher prices can boost profitability, sudden drops can derail even the best laid plans.
Of course.
Fortunately for Finder,
their
CAUTIONARY acquisition looks like a brilliant move in hindsight.
Right.
They acquired these resources when oil prices were low.
Yeah.
And now with prices significantly higher, they stand to benefit immensely if those resources are successfully developed.
It's a classic case of buying low and potentially selling high.
Precisely.
And there are other exploration targets.
Yeah.
Those Dorado play extensions and the UK North Sea prospects also have the potential to generate significant returns if oil prices remain favorable.
They do.
But as we've discussed, there are risks involved.
Yeah.
Exploration is a gamble.
It is.
And there's always the chance of drilling a dry hole.
Absolutely.
And that's a risk that investors need to carefully consider.
They do.
But Finder is actively mitigating those risks through their partnership strategy.
Right.
By bringing in farm-out partners.
Yeah.
They're not only sharing the financial burden of exploration, but also gaining access to additional expertise and resources.
That's right.
It's a smart way to spread the risk and increase their chances of success.
Exactly.
It's like having a safety net while you're walking a tightrope.
Yeah.
But even with a safety net, there's still a chance of falling.
There is.
What other risks should investors be aware of?
One concern is their current financial performance.
Okay.
Those recent losses, while not uncommon for an exploration company, do raise some questions about their ability to generate profits in the near term.
Right.
They're relying heavily on exploration success and lucrative farm-out agreements to turn things around.
And those are not guaranteed outcomes.
Exactly.
And we can't ignore the potential for regulatory hurdles.
Right.
Those new environmental approval requirements in Australia could cause delays and add complexity to their operations.
For sure.
Right?
Yeah.
It's a reminder that even the best laid plans can be disrupted by unforeseen circumstances. But despite these challenges, Finder Energy has a lot going for it.
They do.
They have a clear strategy.
Yeah.
A compelling portfolio of assets.
Right.
A proven management team. And a commitment to mitigating risk through partnerships.
Yeah.
Their recent acquisitions and farm-out agreements have extended their cash runway.
Okay.
Giving them more time to execute their exploration plans.
It's a story of potential rewards tempered by inherent risks.
Yeah.
It sounds like a classic high-risk, high-reward investment opportunity.
It is.
And ultimately, it's up to each investor to decide whether the potential rewards outweigh the risks.
Okay.
Some investors might view Finder Energy as a speculative bet, a company with a lot to prove.
Yeah.
Others might see them as a hidden gem,
Yeah.
a company poised for significant growth with a savvy approach and a knack for seizing opportunities.
It's fascinating to see how different perspectives can shape investment decisions.
It is.
And that's why we always encourage our listeners to do their own research, to dig deeper, to form their own conclusions based on their individual investment goals and risk appetite.
Exactly.
Absolutely.
That all said.
Knowledge is power, especially when it comes to navigating the complexities of the financial world.
On that note, it's time to wrap up our deep dive into Finder Energy.
Okay.
We hope you've enjoyed this exploration of a company at the crossroads of potential and risk.
We've only scratched the surface, of course.
Yeah.
But hopefully we've given you enough information to spark your curiosity and guide your own further exploration.
So until next time, keep exploring, keep learning, and keep diving deep into the world of knowledge.
Thanks for joining us on The Deep Dive.
Until next time.